Hey guys, welcome back. Today we are going to solve June 2024 paper financial accounting partnership area, and this is 14 mark questions. So the partnership is if the question is not very tough, we can easily score 14 marks. If they have did any chaos in the question, that time only will be suffer little, but other than that, this is very simple, very simple area to score 14 marks. So we'll see. Okay, this is a retirement problem which has been asked in June 2024. Okay, X, Y, Z, their partners sharing losses in the ratio of 3:1. The firm's balance sheet has been given. Okay, right. Creditors, all balance sheet items will be given. So we'll set aside this. We'll directly get into the area description area. Why retired on 1st April 2023? So they have balance sheet given on 31st, and they have given the why has been retired on 1st April 2023. Some questions they'll be giving the revised revised PSR. Okay, they have given the PSR for the 2022 to 2023 year. So there in some cases they'll be giving the revised PSR that will be used for certain areas. So if there is any problem, I'll come across, I'll definitely take that here. Okay, so here they haven't given like that. So it was agreed that he should be paid all his dues in full on the date. Okay, we are paying the entire amount to the Y. Okay, whatever he given to the organization, whatever he given to the firm. Okay, for this purpose, goodwill was calculated on 4 years purchase of super profit method. They have given super profit method, right? Okay, for super profit method, they have given the average capital, net trading profit of last 3 years, rate of interest, fair amount. This is till here. They have given details for. They have given details for goodwill. Okay, from this fair remuneration stock, and fair remuneration is an hey guys, this won't be required stock because what we are doing is not relevant for this fair remuneration. And also stock and furniture is depreciated by 10%. This will be used for revaluation, profit provision for data 5% on debtors, provision 18,000 to be created. Everything is for revaluation. The value of appreciation, this is also investment appreciation, and land and building appreciation. This will be also take place in revaluation account. Due to revaluation, the assets and liabilities are not to be altered. Memorandum revaluation account we have to prepare. Okay, so in order to meet Y's obligation, X and Y, X and Z bring in additional capital of rupees 3,50,000 and 7,20,000 respectively. So they are bringing the capital into the business. So profit sharing ratio, the new profit sharing ratio also given. What they have asked is to find out is value of goodwill and journal entry, profit and loss on revaluation. Okay, all the process they have given. What we are no, even if they are not giving this even they have not given this, we have to do. That's it. Okay, so to find out the balance sheet, we need all those things. Otherwise, if they are asking journal entries, we'll put the journal entries. That's it. No, yes. So what are the things we have? For the basic, whatever it is, we require old PSR, new PSR, gaining ratio. So since it is retiring partner, we are going to find out the gaining ratio. So all these three things. Next, once find out this goodwill, we need to find out this the second step. Third step is memorandum revaluation. Fourth step, capital accounts. Fifth step, balance sheet. That's it. The problem is over. So quickly we'll find out the old PSR. Old PSR will be given, new PSR also given. We'll find out the gaining ratio, GR. Okay, see what's the old ratio. Old PSR is, where is this old PSR? Okay, here it is, old PSR. XYZ. And by 6 minus. Okay, so what's the new PSR? 5 by the profit sharing ratio of x and z. Y is retiring, so this is not y, this is z. Okay, so 5 by 8, 3 by 8, right? Okay, 0. Let's do LCM. Okay, 16, 3, 18, 8 minus, okay, 48 minus 6 by 48 minus 10 by 48. This will be 2 by 6 to multiply with 48 divided by 6, which is 8 times. Okay, so 16 by 48. 6:10 is the gaining ratio. The next one is goodwill. We need to find out. So what they have given about the goodwill, they have asked us to find out the super profit method. No, so goodwill is equal to super profit into number of years of purchase. Okay, what is super profit? Super profit is average profit minus normal profit. What's average profit? Average profit, they have given the information. No, see, total this divisible by 3, 6 lakh 30,000, 6 lakh 30,000 plus 5 lakh 40,000 plus 675 divisible by 3, which is 6 lakh 15,000 is the average profit. What's the normal profit? Normal profit is 26 lakh 10,000. 26 lakh 10,000 into 10% is the risk of return NRR, right? So 2 lakh 61,000. Net off, we'll get the super profit, which is rupees 3 lakh 54,000. Goodwill is equal to 3 lakh 54,000 into number of years, which is number of years of purchases. How much? 4 years of purchase of super. Okay, 4. So goodwill is 14 lakh 16,000. So what's the share of retaining partner? 2 by 6. No, 2 by 6, which is rupees 4 lakh 72,000 is the share he has to be paid. Okay, since he is retiring from the company. So it's going to be paid GR, which is gaining ratio, X, Z. How much is ratio? 6 by 16, 10 by 16. How much it will be? 6 divisible by 16, which is 1,77,000 will be paid by X, and then 1,72,000 into 10 by 16, which is 2,95,000. That's it. No, yes, that's it. So we got the goodwill also, right? We can straight away jump into the next step, which is memorandum revaluation account. We can simultaneously open all the account. Okay, we'll finish off and we'll go there. Okay, what are all the things given? Stock and furniture depreciated by 10%. Stock value 3 lakh 15,000. Furniture, right, 4 lakh 20,000. Okay, so stock value is reducing. Then to stock, how much is the depreciation? 10%, 31,500, which is at 10%. No, okay. To furniture, how much is the furniture value? 4 lakh 20,000. Okay, 4 lakh 20,000 into 10%, which is 42,000. Then later What else we have? See, the provision of 5% on debtors to be created. Okay, debtors balance is 8,70,000. 8,70,000 into 5 percentage, 43,500. So we have to create the new provision, which is 43,500 minus 30k, which is 13,500. Next, what else we have? We have the provision for liability. To provision for liability, which is also okay. Liability should increase at the liability, whatever the thing. No, out of this, what we are going to get is excess balance, like a profit or loss out of the revaluation. Okay, if it is loss, we are going to place it under debit side. So there is a logic, but to understand it simply, I'm saying that if there is a revaluation loss, you place it in the memorandum revaluation, you place it in the debit side. If there is a profit, revaluation profit, you place it in the credit side. That's it. So since so far we have seen the losses, and the value of land and building is appreciated by 2,35,000, and investment is on its market value. Land and building 2,35,000, investment, which is 4,10,000 minus 3,75,000, which is 35,000. 35,000. What's the revaluation? Is it whether we are getting the revaluation profit or loss? $165 is the revaluation profit we got. So partners capital, what are all the partners? Why is it at the old ratio 3:2:1? 3:2:1. Okay. $8,500. $55,000. 27,500. 82,500 plus 55,000 plus 27,500, which is okay. Yes, that's it. Just since it is memorandum revaluation, just transfer all this again. So as it is, you have to do, but this time you have to transfer the revaluation profit only to the new partners. Okay, existing partners. Okay, same balances: 31,500, 42,000, 13,500, 18,000, then 2,35,000, then 35,000. So we got the profit, no? So partners capital account, just we are transferring it to the by new partners. Okay, X set. What's the new profit sharing ratio, which is 5/5:3? Okay, 1,65,000 into 5/8, which is 1,03,125. This is 61,875. That's it, no? Yes, that's it. Okay. Next, we are going to prepare the partners capital account. Very simple account. You just going to plug the figures. Okay, X, Y, Z, X, Y, Z by balance brought down. What are all the capitals of all the partners 970, 740, 380. $3,80,000. Okay, right. By general reserve at old ratio. What's the old ratio? 3:2:1. No. General reserve value is 5,10,000 at 3:2:1. 85,000. Okay, that's it. Okay, then what else? We have done the general reserve, then revaluation, memorandum revaluation account. $82,500, 55,000, 25,500. Okay, what's the goodwill? Not the goodwill, we should not put it like goodwill. It's by X capital account. How much is the goodwill amount? Which is 1,77,000. By Z's capital account, which is how much? 2,95,000. 1,77,000, 2,95,000. Right? 2. Y's capital account, which is how much is the amount? Which is 1,77,000, 2,95,000. Yes. That's it. Yes. Okay. If you see the journal entry, you will be easily understanding this this area. Okay, let me put the journal entries also. Whose capital is gaining? So Y's capital is gaining, right? Y's capital account 1,27,000, which is 4,72,000, right? How much is the X is paying to Y? 1,77,000. How much is Z is paying, which is 2,95,000. So this is the entry we are using there. So all these are capital account, just they are placing here. Okay, so its capital is over. Memorandum revaluation, we have to reverse, which is 1,03,125, 61,875. Right, memorandum revaluation over, general reserve over, goodwill over. Then what else? Guys, we have done a mistake. Actually, the thing is, average profit should be deducted with the remuneration to partners. So we have actually missed that. So 6,15,000, which is the remuneration per to partners is 1,20,000. So remove that. Okay, how much? 6,15,000 minus 1,20,000, which is 4,95,000 is the average profit. So minus 2,61,000, which is 2,34,000 is the goodwill amount. So 2,34,000 into 4, which is 9,36,000 into 2 by 6, which is 3,12,000. Right. Okay. So 3,12,000 divisible by 60 into 6, 17,000. So 1,95,000. That's it. We'll take this to the respective accounts. 1,95,000. That's it. Now that's it. We came to the last part of the problem, which is we have to pay out the payments to the, we have to pay out the payment to the retaining partner. No, for that the existing partners are bringing capital into the business, which is how much? 3,03,000 and 7,20,000. To bank account. How much we are going to pay? 7,40,000 plus 1,70,000 plus 55,000 plus 117, which is 12,77,000 we paid to them. So what would be the balance? Just we'll calculate. Okay, to balance carried on. $970 plus 255, 825 plus 350, 14,37,375. Okay, 380,000. $9,55,625 is the Z's balance capital. That's it. Now we'll quickly prepare the balance sheet as on 1st April 2023. How much is the asset balance we have? We are not going to change any asset balance because we are actually reversed it since we are using since we have used only the memorandum revaluation. No, so no need for any revaluation assets here. So just paste as it is, cash in hand and cash in hand debtors 8,40,000 minus provision, just 870, 30,000, just 8,40,000. Okay, bills receivable 1,65,000, stock in trade which is 3,15,000, investments which is 3,75,000, furniture which is 4,20,000, land and building which is 7,80,000. Then we have a cash now, cash in hand, which is how much? 17,000. Cash at bank, there will be a change because how much is the opening balance of cash, which is 2,48,000. No. Then two of our continuing partners have brought the capital off, which is 350 and 720. So plus 350 plus 720, and how much we paid out to the outgoing partner, which is 12,55,000, right? So 12,77,000. Okay, we'll do that. 248 plus 350 plus 720 minus 12 72,000, which is wait 248,000 plus 350,000 plus 720,000 plus 41,000 is the cash balance at bank. Okay, to partners capital account. What's the X and Z capital? 14 lakh 37,375 and 9 lakh 55 625. Right, what else we have in our area? Creditors 4 lakh 25 and bills payable 1 lakh 35. 4 lakh 55, 4 lakh 25 and bills payable 1 lakh 35. That's it, it's total, whether it's balancing or not. $29 lakh 53,000. That's it. Here, this side 14 lakh 37,000 375 plus 625 plus 425,000 plus. Yes, that's it. Problem is over. So the thing is, what we have to understand is, see, this would be the we need much more attention in this area, and other than that there won't be any critical area in this. Everything is a simple flow of problem only, not a big issue. Thank you.